winners and losers, what do they do that's different? You know, how do they think differently? How do winners manage their risk?
Okay, winners, I think, as far as possible, take the emotion out of trading. They plan their trades in the first instance, and they have the discipline to keep the, when they decided where they were going to put the stop in the first instance, they did that for a very good reason. They're not going to come around and say, actually, I've slightly changed my mind. I think I'll just move it a little bit further down. If you start doing that, then you've lost the discipline and you're putting too much emotion in, and you're going to make life a lot harder for yourself. So try, that's what the winners do. They strip out the emotion. They, and they'll profit more often than not because of it.
And how do the losers think?
Losers, I think, again, in my experience, and in my experience of being a loser, I think the biggest thing that contributed to that was not the original bad trade, but then trying to trade out of that and trying to make the money back. And you lose perspective, and the discipline goes when you try and do that, because all you're thinking about is the money aspect of it, and that's actually clouding the trading aspect of it. So I would say, this is what happens when you get onto a losing streak, or if you are new to trading and you find that you're losing money, it's because you are not trading for the wrong reasons, because we're all trying to be profitable, but you're letting the money side of it rule rather than the trading side of it and the discipline of trading.
How do winners manage risk?
Winners manage risk with a great deal of respect, and again, it's about this planning of a trade. And the other thing is, you can be following a market and thinking, I really fancy this. If it gets down to such and such a level, I want to buy. But what you're also doing is saying, well, if I do go long there, but I get it wrong, where is the market likely to fall to? Where's the next support level? And what someone who's sort of consistently winning will do, well, actually, if I'm wrong, the market's going to fall way down there, and even for the smallest trade that I can put on, that means that I'm going to lose. I could potentially lose 5 times or 3 times or even 2 times what is my sort of sensible around my money management pot, if you like, the amount of money that I only risk per trade. So what that person is going to do is then, okay, that trade is ultimate. Although I like the sound of that trade, it's too much of a risk, and therefore I'm going to pass it by. And that's what they do. You pass by a trade because ultimately the risk-reward doesn't play out.
Do winners tend to add to winning positions? The losers become winners over time?
Winners, yeah, I mean, I think this breaks down into, in terms of, sort of adding to winning positions. Again, I see this as a differential between someone who's trading a range and trading a trend. If I was in a trend, I would be adding to that. If I caught a market that was trending, going upwards, like you could say, like the US stock market, like all stock markets, but let's say the US stock market has since March 2009. We've been in a 5-year uptrend in that market with barely a significant, a few corrections, but nothing major. You can put a couple of trend lines on that, and we're just going onwards and upwards, and there it is. It'll go onwards and upwards until, of course, the day it doesn't. If you caught that trend, I mean, you'd be sitting pretty now, and you would have been adding to that as the market goes up. So you'd probably be using your unutilized or your unrealized profits to add to that position. Now, that's a potentially dangerous thing to do, but of course it does compound the possibility of making more and more money over time as the trend goes up, so long as you keep a very close eye on your stops and look to get out so you can preserve those profits. Now, that's one side of it. If you're trading a range, then yeah, I mean, if you're catching the highs and lows and making a turn every time and building up your capital that way, then of course you've got the temptation to do a bigger trade each time. But again, you've got to be cautious about that because there's going to be a time when you get it wrong. Now, as long as you've got the capital to do that, there's no problem. But just keep in mind your money management.
Have you noticed a link between the way losers trade and winners trade?
Not a great link. I mean, I just think that it just comes down to people who are consistently making money are disciplined. It's as simple as that.
What kind of skills and character traits make a good trader?
Well, in terms of sort of character traits, I do think sort of it comes back to sort of being disciplined. You don't have to be disciplined in everything in life, but you know, when it comes to sort of like the work aspect, then I think it's sort of having that discipline. I think some, you know, you need to have an analytic perspective. You need to be interested in what's going on in the world, and if at all possible, and it's difficult, I know, try and filter out what is important and what isn't important, and how, you know, the markets you're looking at are going to be affected by that. But I think you've also got to be able to and want to look at charts and try and discern patterns, and try and see, you know, sort of how you can trade off those patterns and look for these support resistance lines. So I mean, you know, if you look at a chart and it's just that means absolutely nothing to me, then you know, maybe you want to think about doing something else.